4, 3, 2, 1.
Hey, everybody, it's the Flow Show. He's Steve Strazza. I'm Sean McLaughlin. We got a little bit of a late start this morning, some technical difficulties all around. I got some tech difficulties. Strazza's got some tech difficulties. Our studio's got some tech difficulties. It's just one of those beautiful Mondays. Hope you guys are doing well. Strazza, how was your weekend?
It's a theme today. Tech
It's a theme.
problems. My weekend was good, man. I was outside a lot, which I always like. Played 36 holes of golf, which always makes me happy. How about you?
I went camping with my son joined Boy Scouts this summer, and we had our first camping trip this weekend. It was great. It was wonderful.
Are you do you like volunteer and you help out in Boy Scouts? I feel like you
I help out. Yeah, I'm like one of the volunteer dads, and
yeah. I feel like that's perfect for you. Teaching them how to tie knots and stuff.
well, we had a great time, man. We hiked up. We stayed at a lake up in the mountains. The weather was perfect. Lots of great food was cooked around the campfire. It was a good time all around.
Did you make s'mores?
We did make s'mores. Oh yeah. Can't go camping and not do s'mores.
You got it. Yeah, you got to do it.
Yeah. All right. So let's get down to business. This is the Flow Show. This is where Steve and I take a quick little tour around some charts that we think we like for setups, and we see if there's an options trade that we can make, and we kind of piece it together, see if we can come up with something that makes sense. So Strazza, I'm going to give the floor to you. What are some charts that got you thinking cap on now?
Look, we've done a lot of talking about the volatility and the selling pressure and these dicey markets. And here's the deal. Where did the bears go? It's almost as though they disappeared. I keep sitting here, Sean, and saying, today we're going to get some big red candles. Today the bears are going to come back out. They're going to try to sell this thing. But it's not happening, right? So I can only listen to the market. If they're not going to try to sell this thing back to the pivot lows, retest the lows, it doesn't look like it, by now, then we got to get behind this thing. And add more long exposure. That's the only thing to do, right? So
yeah, every dip's getting bought.
10 straight days now. The price action's been overwhelmingly positive. The back half of last week was especially bullish, right? Where the regional banks and the small caps and the biotechs and the speculative growth, like look at ARK, look at small cap growth, look at the IPO index. All this stuff is starting to work. Charts like Zoom that you have up right now can't break down. Snow is another one, Snowflake. These John Deere, right? These topping patterns are not breaking down. So shorts are not working, right? So we can only get long. I'm showing the NASDAQ 100 here. We retraced now 62% of the decline that began in July. We're back above the VWAP from the pivot highs. For me, that's the all clear, right? If we're above this VWAP here and we've retraced 62% of the move, which most of the large cap major averages have done now, all of them actually, then we can only just add more long exposure. That's the only thing to do. I do think, Sean, that they will come out here and try to sell this thing. We'll get some corrective action in the coming days and weeks. So let's talk about how we want to do this. I have a couple ideas. I like Asia. Asian currencies are all the craze over the past few weeks. They're absolutely ripping. Korean won, Malaysian ringgit, killing it out here. Even the dong is ripping, right? So I think we want something China, Asia, EM. My favorite chart right now is the Coupang. The Coupang CPMG. Yeah. We could do something here. Look, it's already up. I get it, 4.5% today. But if we go out, Sean, zoom out on this chart. This thing's perfect. VWAP here anchored from the IPO date. Okay. We are breaking through this rounding bottom pattern. Hard retest. Nice little shake. Right, and then a massive bullish engulfing 2 weeks ago now, following a pretty solid earnings report, I guess. This is the Amazon of South Korea.
How many times have we heard this is the Amazon of XYZ?
Dude, Amazon of everywhere is working right now except the Jumama. C Limited, absolutely killing it. The Coupang printing a primary trend reversal. Mercado Libre going for new all-time highs. Shopify absolutely ripping. I bought the puts. We talked about buying the puts in this one last week. Didn't work. That's information, right? The Amazon of trade is alive and well. And I think we can embrace something like Coupang because it gives us that Asia exposure. It gives us some of that emerging markets exposure. You are investing indirectly in the currency of South Korea in this case, right? So I like this a lot. This interests me. I think you go out a little bit further on something like this. Maybe you give it 6 months, you give it a year, right? Let it work. That's idea one. Another one I think you might like. We can come back to this if you like it so much.
I like it, and I'll tell you why when we come back.
LQD. Speaking of uncorrelated investments.
Sorry,
right?
what's that ticker? I can't read it on your chart.
LQD.
LQD, sorry.
Sean, this is the pattern we've been buying for 2 years now, right? So are we supposed to discriminate on something like LQD because it's a bond fund? Or do we just shut up and keep buying the same pattern that keeps working? This looks just like Coupang, only it'll give you exposure, long bond exposure in your portfolio. This is investment grade bonds. LQD. So that one interests me. Let me throw on the watermark. Sorry about that. Boom. Yeah. iShares investment grade corporate bond ETF. Something like AG looks good too. Like just look at the trend reversal shaping up in these bond funds. High yield, if you're feeling kind of freaky. Nice dividend here in the HYG. But these bond funds, look at these last 2 weekly candles in the HYG. The bond funds are working. And maybe this is a time where I'm talking about buying REITs. We're talking about buying utility stocks. Defensive groups are working. The yen is starting to trend well. Precious metals are working. What do all these trades have in common? They're safe havens. Bonds, maybe not high yield, but bonds in general, another safe haven trade. They're all working right now. So I think you add some defensive exposure to your portfolio at this point. It makes sense based on the price action we're seeing.
Well, that's interesting that all these safe haven trades are working or looking like they're going to work, given what we just said a moment ago about how looks like the worst is behind us.
Yeah.
Markets are looking like they want to go higher. That what we just had was a blip. So to me, that's mixed information. I don't know if I like that.
I'm
know
with
what I'm
you.
saying?
No, I'm absolutely with you. I'm trying not to overthink the inner market, but someone like me, I barely own any of these defensive groups, right? So they're starting to work. It's okay if they trend higher in bull markets. You don't want them to lead for too long. So if we look at something like AG relative to the S&P 500, not leading. This is the relative trend in the bond fund that we're talking about, right? So if this line was moving up and to the right for a while, then that would be concerning. Even something like real estate, Sean, it's been so good, but this is real estate versus the broader market. So I don't think we have to worry too much about the risk-off nature of these things, at least not yet. Like XLU SPY, this one a little bottomy here. If these trends reverse, these relative trends reverse, and the defensive actually start leading over intermediate to longer time frames, then I think it's a concern. For now, I think they're just more stocks that are working. You could look at it more as rotation than defensive positioning, I think.
All right. I like everything you're saying, except I don't know. The defensive trade doesn't work for me. I don't think. I feel like that muddies the picture for me. Not that it's wrong. It's just I don't know. I don't like it. I do like this Coupang, and here's what I like about it. Do that zoom out again. Oh, that's the zoom out from the IPO, right?
Yeah, look at this. So
what I like about this Straza is that there you go. That's the chart I'm talking about. What I love about this chart, Straza, is that we are now breaking out for the first time above the VWAP since the IPO. That's the first time.
That's right.
I mean, we did it a little bit. We didn't hold it back in May, but we're still above it. And if we're going to break out here, man, I mean, next stop could be all-time highs.
Do you put the leaps on something like this? When you look
at this?
No,
I don't want to do leaps. And I'll tell you why. I'm looking at the February options.
Yeah.
And I don't do this very often when I just buy straight calls, which by the way, I do want to buy straight calls here. The vol is low and declining. I like that. I don't usually do the Straza, but the February 25 straight calls, they have almost a 50 delta. I don't usually buy 50 delta calls, but I could get them for under $2 right now. We're right about $2.
Easy. That's crazy.
Yeah. To me, if you and I think that this thing is going to potentially go back and test the highs up at 50 or beyond, paying $2 for a $25 call seems like the best trade on the books. I mean, look at this thing. I mean, that's a great leveraged bet.
I love it, right? Because I think this thing, you get one leg up and we're probably in the 30s. So those calls are paying at least $5 at expiration.
Yeah.
If we trade in the 30s quickly, they're going to pay a lot more than that. And Sean, I don't think it's out of the question or would be at all unusual for after a pattern like this completes for this thing to double by February. And we're looking at this around 50.
Ooh. Right. Now, if I want to, stick to my knitting, so to speak, and just buy 25 Delta calls like I usually do, the 25 Delta strike right now is the February 29s, and you could get those for probably about 85 cents. There's not a lot of open interest there right now. It looks like it's probably a new strike that just got listed recently.
Yeah.
But, going back to the February 25s, there's a lot of open interest there. There's trading there. And I don't mind paying $2 for a 25 strike call. I think
yeah. So you go $4 higher on the strike and it's only like $1 cheaper?
Yeah. Yeah.
Strange, right?
That is strange. So Straza, I want to keep it simple. I like this Coupang. Those other charts you showed, again, I feel like that muddies the picture a little bit for me. I don't love making directional bets in indexes. It's not my favorite trade in the world. Not that it can't work. Of course it could work. Right. But you and I talk about it all the time. We want the juice, right? And if we're going to get some juice, we're going to get it in Coupang, not in a bond ETF, right?
And dude, insiders are all over this name. A lot of big Druckenmiller's in it. A couple other hedge fund guys, a couple different Tiger Cubs are invested, and we keep seeing political filings from congressmen buying this name.
Spicy. That makes it a little bit more spicy.
Yeah. So it's a perfect pattern. I don't think there are many more actionable charts in Southeast Asia right now than this. Like, you look at something like BABA, people are getting excited about China, but they really need more time. This, we can say the path of least resistance is higher. This is a new uptrend. And
if we're looking at February options, that gives us 6 months. I mean, that's plenty of time for this thing to decide what it wants to do. And look, we don't even need this thing to go back up above 50 to make money. I mean, if this thing just retraces half of that, we're sitting pretty, making good money here. So I like it, Straza. This is the trade I'm going to put on the books today. I'm buying the February 25 strike calls in Coupang, ticker CPNG. We're going to keep it simple. No need to do any multi-leg spread here. Let's just keep it simple. Pay $2 for the calls and see what happens. Oh, maybe we should point out, just for completeness sake, where are we wrong? I'm thinking 22. If we can't hold the 22 level, you probably have to zoom in. You're not going to see it on your chart that you're sharing there, but
Sean,
maybe we can give it a little bit more room, go down to 21. I don't know if I love that.
If you look at my chart, let's use the VWAP that got us in to get us out, right? If we fall back below the VWAPs that we're at 2140 right now, right? If we drop back below that VWAP that we just reclaimed from the IPO date highs, I think that's your out.
Yeah. So let's call it 21 just to have a nice easy round number. If we're below 21, we don't like it anymore.
Yeah. Sean, I got a question for you. Something like this. You're looking at the different contracts. You're saying, I don't usually do 50 Delta, but in this case, it makes sense. Would you ever say, hey, I'll buy some of the 50 Deltas and then also some of the 25s? You ever do that? Is that crazy? Like, why both? If you like,
I will do that if I want to add to a position later on. I might buy, like using this example, I might buy the 50 Delta calls today. And if this thing starts working a week from now and I want to add to the position, maybe I'll add a little juice and buy those further out of the money calls. It's not something I do a whole lot. I usually take my full position right off the bat, but that's where I would do that.
Because in this case, right, you buy the 50 Deltas, we could be in the money quick. We could be in the money quick, and then you don't have that as much juice anymore, right? You're ultimately in a synthetic long common position. So then maybe you would look at the options chain again and say, I'm going to add another 50 Delta, whatever the 50 Delta is today, right? To give yourself more leverage.
You know what I've done? I don't do this a lot, Strategy, but what I have done in the past is, regardless of whether I bought the 50 Delta or the 25 Delta, if I buy a call and it quickly goes in the money, like, one of these trades just works right off the bat and that's great. Sometimes what I will do is I will sell that call that I bought that's now in the money and use those proceeds to buy, 3 now slightly out of the money calls and have a little money left over, right? Like sell the one call for $10 and buy 3 calls for $3 a piece. That costs $9. I'll have $1 left over in the bank, nothing to lose. And now I have 3 times the leverage that I previously had if this thing continues further. Sometimes I'll do that if I'm feeling really aggressive. I don't do it a whole lot, but I've done it before and it's worked out really nicely for me.
You're like rejuicing. I like that. That makes sense, dude.
Yeah, yeah.
You want to talk about one more thing before we hop? This has been kind of quick. I want
Yeah,
to show you.
sure.
Here's the situation. This chart is so perfect, set up for a little scoop and score here. Okay. This looks like it could be the failed top of the century right here. This is Coinbase. I don't want to make the bet that in this environment where tech stocks are ripping, that cryptos won't play catch up. There's a very, very strong positive relationship here between growth stocks and cryptos. Over the past 2 weeks now, growth stocks have been moving a straight line higher. Crypto has done nothing, dead in the water. I think there could be a massive catch-up move here. I also think this could absolutely break down, fail. Like I said, sellers are probably coming out soon, right? Maybe they hit the stock market and they finally break down the cryptos. When I look at a chart like this, I just want to trade this in either direction, whichever way it resolves. Like, sure, I have an opinion. I think it probably resolves higher, but at this point, it's taking so long. If this thing breaks this little flag, we're talking about Coinbase here, and starts moving lower, I want to be long puts. How would you play this? Would you get long calls and long puts out of the money and just?
So I'm a little conflicted on this one. I mean, it's not what I would expect. Let me back up.
Yeah.
Gene, if you want to pull up my chart real quick, I got Coinbase up here.
And look at that vol. Oh,
the vol is cheap according to this, right? Cheap at the lowest level's been since last September.
You're going to look at the prices and say it seems crazy expensive.
Right. Now if I pull up a December options chain and I look at the December 200 straddle, check this out. I'm going to have to pay $65 for that.
That's
$65.
That's a lot.
That means the stock has to move, what's that? 35% to make, 35% by expiration. In this case, this is December for us to be in the money. You know, we could make money if there's a big move tomorrow. Sure, we won't make a whole lot, but I don't know, dude. That seems a lot. I mean, I think the market is sniffing this one out. They're like, there's a big move coming, and the options markets, the options market is no dummy, right? There's a lot of smart people doing a lot of smart things, but this is just confusing to me because I would have thought this straddle would have been a lot cheaper. This seems very rich to me, considering implied vol is where it's at.
These are some of the most expensive options I've ever seen in my life, but this one is truly a wild child. Say, we wake up and Bitcoin's back at 65, 70 tomorrow. This thing's trading back to the upper bounds of this range. It's probably up 50%, in a week.
All right. So let me change this up a little bit. I got an idea. Let's try something here.
We're going to condor it.
Yeah. What if we buy the 200 calls and the 200 puts, but then we sell the wings? Maybe we sell the 250 calls and the 150 puts. So the most this spread would be worth is, geez, look, the most the spread would be worth is $50, but we'd still have to spend 37 to buy it today.
No, it's no good.
Yeah, these numbers aren't working for me.
No good. All right.
I like where your head's at, though. I mean, I'm looking at that chart. I'm thinking the same thing, man. Like, there's a big move coming.
If this thing breaks, maybe you set your alert. You keep it tight. You could use like the lows of Friday, or I think you could literally use like the lows of Friday, and then you just go naked puts or naked calls, whichever way it goes in. You are going to pay up, but if you get a big move from something like this, high price stock, 5-10x, hell yeah. And then I would go out. I would keep it pretty close in terms of expiration. I would go out like a month and something like this.
I think
what?
I think if you want to play this one, Straz, and I know this is not your favorite thing to do, but once a direction is declared, whether it's up or down, I think you got to play it with a vertical spread. You got to buy, a slightly out of the money. Like, for example, for bullish, you got to buy slightly out of the money call and then sell one of these really far out of the money calls because there's a lot of juice there.
Finance it a bit. Yep.
Yeah. I think that's what you got to do. That's how I would play it.
How far out would you go in something like this? Would you just go to the upper bounds of the range, like 275?
Well, let's see. I've got the December options up on my screen right now. Let's just say you and I decided that it's breaking out today. We're going higher. We want to be buying it. Yep. I would probably say 275. Wow. What's crazy is that the 270 strike calls in December have a 32 delta, which is pretty high.
32 delta?
Yeah.
Jeez.
32 delta, and that with this stock would have to get back and make all-time highs for those to be in the money. This is a tricky one, man. This is a tricky one. I think maybe if, gun to my head, if I had to put a trade on right now, I'd probably just buy an at-the-money call spread. I'd buy these 200 calls, sell the, let's see, what was it, 250 give me? That spread would cost me under $17.
Coinbase, Brian Armstrong, if you are listening, if you're out there, please split your stock so that we could do more with it in the future.
Yeah, Brian. Yeah. We would like that. Traders would like that. Investors would like that. Let's keep your stock under $100. That's a good.
Yeah, come on.
No one's ever going to listen to me, Straza. But if I was in charge of the stock market, I would make it mandatory that every stock over $100 needs to be split. As soon as you get to 100, you split 2 for 1.
Can options traders unite? Let's all sign a petition. I'm so with it. I love it. Warren Buffett will be the one holdout who'll be like, "Fuck you guys. I'm never splitting." That's fine. He can have that. He can have that space. But everybody else, like this one, give me a 10 for 1. Let's go.
Yeah. All right. Coinbase on our radar. We're going to keep an eye on it. For me, there's no trade right now. If I do trade it, I would probably do a call vertical spread if I'm bullish, or a bear put spread if I was bearish. We're kind of in wait and see mode to see which way this thing declares. I got to be honest, Straz, I'm thinking that chart looks pretty bearish to me. I feel like the next big move is down. If I had to flip a coin, or I'm not flipping a coin, if I had to pick a side, I would pick down.
The coin?
Yeah.
Yeah, dude. The fact that this hasn't failed this top already and started moving higher with what stocks have done the last 2 weeks, it's like, I don't know what's going on with these cryptos. We had Chris Verone on the morning show the other day. This is like an institutional guy, excellent analyst. And he's talking about Bitcoin. He's like, Bitcoin's not acting right. It's a thing. It really is.
It's a thing.
It's strange. You would think catch up, but I'm saying, Sean, they come out and sell this thing, right? We got a big down week. Maybe that's what it takes to break down the cryptos. So
yeah, it might
I don't
be.
disagree.
That's a good point. We haven't had since the volatility event of the 5th, whatever we're calling that. Since that, stock market has basically just gone straight up. So when we get that first big red candle, which is coming, it could happen this afternoon. Who knows? But when we get that big red candle in the stock market that's overdue at this point, it'll be interesting to see how coin trades in that tape.
The ones that didn't bounce over the last 2 weeks, like I guess Coinbase has been like kind of.
You know what? Maybe that's what we need, Straz. That's what we need to wait for. That's our trigger. We want to see the next. We want to see the stock market down 1% or 2% on a day, and let's see what coin did. If coin hangs in here, that's incredibly bullish.
100%.
If it breaks, which I think it will, then we get short somehow.
All right, so we'll follow up on this. We'll talk about this one again next week. We'll track it a little bit. Maybe we'll do some more.
In the meantime, I like this Coupang. I'm getting in today. I'm buying those February. What strike was that? Let me pull it up again. 26. I'm buying those February 25 calls for around $2. I like it. I'm in. That's what we're doing.
I'll buy them with you. All right, let's rock and roll.
All right, great show, great discussion. Thanks for tuning in, everybody. We try to do this every Monday. Sometimes we're traveling, sometimes there's weird stuff going on, but we're usually every Monday, 11:30 Eastern. So we'll catch you next time. Until then, me and Straza will see you on the morning show tomorrow. Take care, everybody.
Thanks for watching.